I'm Corbett Wall with DB Auction, here with your feeder flash for Monday, September the 19th, brought to you in part by Macrocin. Proven efficacy at an affordable upfront price. Without the BS, end of story. For more information, go to macrocin.com. Also, Joplin Regional Stockyards, about 5,000 head for their feeder cattle auction here today on Monday. Don't forget their co-mingled program. I've told you many times that Joplin's probably, or definitely, one of the most progressive thinking sale barns or big markets in the country, and they've been co-mingling cattle there for over 20 years now. And the program is small producers or guys that have mixed cattle can bring those cattle in before 5 o'clock on Sunday for the regular Monday sale. Bring them in during the day on Sunday, and they will take those cattle, they'll sort them up, they'll put them with other producers like cattle of the same size, same quality, same type of cattle. They'll give your cattle a shrink factor because that made it, they figured out that made it more fair, giving you a shrink factor depending on how full the cattle are when they come in. And then they will assign you a percentage ownership of that commingled lot. So once you get that percentage of the commingled lot, when they bring the cattle in together and they sell them in a bigger package and they're more attractive to the buyers, and they sell them on the high line time, right around 11 o'clock in the morning, which is the best time to be selling, those cattle will bring a bigger price than they would selling them in small, 1, 2, 3 head package deals. And it's been working really good. It bunches the cattle up. The sale doesn't run late into the night and things like that. They have in the last several years started giving those cattle a one-shot vaccine. They charge that to the buyer. The buyers love it. Those cattle have gotten really popular and they sell well, and you get closer to a large string of cattle that somebody might have that's a lot bigger operator. But check out the co-mingled program at Joplin Regional Stockyards. What's our next hurdle? It just seems like we just keep running into one almost every week. And I'm talking about for the cattle market. This cattle market is due to surge. I mean a lot higher, and we have been gaining ground. It's kind of been 2 steps forward and 1 step back, and we're slowly over time gaining ground. And this cattle market is headed high, and I mean really high. And of course, you guys know that, and it has everything to do with supply and demand, and the fact that we've had some major droughts in the last 3 years in some major production areas. Had a big sell-off of cattle. We've slaughtered so many of our beef cows in the last couple of years, and we're just running also in our cyclical time that we're running on really tight on numbers. And so our demand has been excellent, especially for export. And so we're going to be running into some really high prices. We're already getting into some really high prices. Basically most all of your calves weighing under 5.5 have a good chance to bring up to and over $2 a pound, almost anywhere you're at. And that's a pretty good market historically. Now it may not offset all the input prices and the increase in prices of our inputs like our fuel and our commodity feed and of course even just straight corn, the shortage of hay, all that kind of thing. It may not be enough to offset that, but in the whole history of things, that's a pretty good market. But we're going a lot higher than that, and we have a right to get our fat cattle higher than that too. It's harder to get that done because packers don't want to give much ground, and people aren't forcing the issue with them as of yet. But you just look at all the hurdles that we had to get over just this last week. We had our supply and demand report on grain. It showed that our stocks of grain are going to be tighter, and it showed that our expected production for this year's crop that they're starting in heavy harvesting right now in in the Corn Belt there. We're seeing that's going to be disappointing this year. Well, it caused our grains to go up big earlier in the week, and then they fell back. But the cattle market got stunted in that, especially your feeder cattle got stunted. Of course, fat cattle shouldn't, but a lot of times they will on that. We saw the railroad worker strike, which that gave us another fear with our corn market, and that held our cattle market back a little bit. We saw on Monday that President Magoo put out one of his executive orders on advancing biotechnology and biomanufacturing, including in there more cell-cultured foods, which we're battling against these fake meat products, fake beef products, and they've fallen on hard times. Everybody thought here a year or two ago that was going to be the coming deal. These fake meats, and it was all mostly plant-based meats, and they've really fallen on hard times. If you've noticed, they've been in the news again, talking about how much money they've been losing. Their partnerships with some of these bigger fast food organizations have not been successful. They unveil these products in a few markets, and they don't do well, and they end up taking them back off. They haven't done well at all. A lot of people have dumped a lot of money in there, and dang it, it hurts my feelings that they're going to lose a lot of that money. But maybe they shouldn't have been, so quick to jump on things like that. But, Bill Gates, if you watch the 60-minute interview, he was sitting there enjoying a greasy cheeseburger from his favorite drive-in hamburger joint, and telling people that we shouldn't be eating that stuff. We should be eating this fake product, either plant based or this cell culture. Now, that sounds good for us to continue with our beef demand. The problem with that is, and we need to stay after it, this cell cultured stuff that the executive order is looking to expand. And we have seen at least the U.S. Cattlemen's Association come out against that. The cell-cultured product is a whole lot superior to the plant-based fake meats. And the heck of it is, they just haven't made enough of it yet to get the economies of scale to make it affordable. But eventually they will. And then we're going to have to fight this cell-cultured stuff, which it's definitely going to be full of growth promotants, and that's where we're seeing a big expansion in our beef demand, is for more all natural products, and we're seeing more and more producers doing that all the time, and not having any hormones in the beef and things like that, which commercially people still do it a lot, and it's an added help whenever you're raising cattle, to give them some steroid help there, and then we've found that it's healthy, but some people don't want it. Well, they're paying big premiums for NHTC cattle, and some of these programs are for NHTC cattle and all natural cattle that haven't had any antibiotics in them. Well, if you're raising cell-cultured foods, you have to put growth promotants in them, and you have to put antibiotics in them, because it'll wipe them completely out if they don't. Well, these products are going to be full of that, and they're going to be full of sodium, trying to make them taste, make them palatable. But we've got to get on top of that. We've got to get our rules changed with our beef checkoff dollars, where we can start competing against those fake proteins, because right now, we can't do that. But we've been fighting a lot of hurdles here. The economy has been tough. The pandemic, we made it through that with all the restaurants being shut down and the food service almost coming to a halt. We've gotten through all that with our cattle market, and it's just about time for us to get out in the sunshine. And if we could just get a week or two here, or several weeks in succession, where we don't have more hurdles thrown in front of us, we're going to see this cattle market take off. This last week we saw the Southern Plains get $1 more for their fat cattle. Northern Plains was steady. We've closed the gap on that. We're not seeing a big premium paid in the north so much. our grading is not very good. We've seen packers struggling to find cattle to fill the needs for that top quality, high choice and prime product that they got so used to after the cattle were backed up during the pandemic. And then they got obese and overdone, and they liked that quality of meat, and it was easy to sell. They're wanting more of that, but our grading is going down, but our weights are going up because the rations that we're getting to try to feed these cattle, halfway with a decent cost of gain, they don't contain as much corn in there. Well, corn is what makes choice carcasses, and so we're seeing that, but. We've got to have some other things. It seems like everything that's out there affects the cattle market, and the cattle market doesn't affect that many other things other than just cattle. But we need to get it off our back and have a clear run there and gain some ground here. And we're going to be gaining a lot of ground here over the next several months, guys. And you guys know it, but I think it's time to be bullish. Let's talk about your board for last week. October live cattle futures started out Monday up just 7 cents, but Tuesday was down 95. Wednesday was down 45. We saw our cash feeder markets responding to that board, and they were down hard. But then Thursday, live cattle futures were up $1.27, and then Friday off just 12 cents. But October live cattle ended the week at 145.50. Down just 17 cents for the week. And December, which actually has more open interest in it now than October does, everybody's rolled over into December. December ended the week at 150.97, absolutely steady with the end of last week. So that's a positive sign that the live cattle futures are hanging in there, even though we've seen so much shake up down the road on our feeders. But September feeder cattle, Monday was down 147, Tuesday was down 207, Wednesday was up 52 cents, Thursday down 62, and Friday down 15, with your September feeder cattle losing $3.80 through the week, closing at 179.20. October ended the week at 181.25, down $4.50 for the week. That's a tough hit, guys. And the heck of it is, we saw our corn come up after that WASDE report there, but still by the end of the week it had come back off. And new crop December corn actually closed the week at 677.25 cents, down 7 3/4 for the week. Beans were still up because they launched after that WASDE report there, but they come back off of that some. But beans ended the week at 14.48.5, up 36.25 cents a bushel there. Your fat cattle trade up through Thursday, 46,300 head, which is nothing. And just like I said, we say that we want more negotiated trade to have a chance at a better market. And they argue and say just because we have more negotiated trade doesn't mean we're going to have a better market. Well, every time we don't have a very good market, we don't see very much trade. And every time we have a better market, we see a lot of trade. So naturally, it makes us think that if we at least maintain what minimum levels we have right now of negotiated trade, hence the Cattle Price Discovery and Transparency Act, that we would have a better chance at keeping a more fair market. Well, this past week we didn't sell that many cattle negotiated trade, and it was kind of a struggling market, especially in the northern plains. Like I said, the southern plains gained a buck, but thought they had a better chance to get more than that. But live sales last week in your steers and heifers, direct basis, 5-area feeding region, 140 to 145, kind of unevenly steady. Your weighted average on live steers in the 5-area was 142.79. That was up about 62 cents compared to the previous week at the same time. But we did have some Friday sales, and they were a little bit higher than that in the northern plains, so we'll see that come up some. Dress sales last week, 224 to 230. Weighted average on dress steers, 226.55. That was actually down about 8 cents because we didn't see much come up in there, but we had some dress trade on Friday and it was a little bit better, so we'll see that come up. So we had such miserable slow trading all through the week last week up through Thursday. Friday there was more business to be done, and we did see some sales on Friday. We've seen them reported and confirmed up through 2 o'clock. I wouldn't be surprised if there wasn't more trade late on Friday that we see after we get all these rounded up, and I'll tell you about that on our next visit. But of course Colorado is confidential because we don't have active enough trade and enough participation from the packers there, so we can't see that information. Iowa had 1,800 head confirmed sales on Friday, less than 15,000 for the week, which would be about half what they would do on a big week. But live sales ranged on Friday the best we'd seen all week long, 143 to 145 and a half. We hadn't seen that. We hadn't seen 145 and a half. And so we're going to see them being aggressive. They were aggressive late in the week last week because they were needing cattle. They were willing to give higher prices, especially for the better grading cattle. We should see that come into this week. And this week we should get a significantly higher market, fat cattle market, at least a buck. And we should gain that buck in the northern plains for sure. Dress sales 225 to 226. Nebraska 5,200 head on Friday. A little over 22,000 for the week, which is getting towards normal for them, but still a little bit light. But live sales in Nebraska, 143 to 145. We'd only seen that 145 on one little stick out deal before Friday. So it's encouraging when the highest prices for the week are at the very tail end of the week as we're going forward here. But dress sales in Nebraska, 226 to 230. We hadn't seen 230 until the end of the week there on Friday in Nebraska. So that's better too, guys. Kansas, only 600 head confirmed sales on Friday. Only 8,300 head confirmed in the entire state of Kansas. Fat cattle, pure negotiated sales. That's pitiful, guys. That is terrible. And the only thing they had on Friday quoted was 226 dressed, and so that would be some northern cattle going up into those Nebraska plants there. Texas had a couple hundred head of mixed cattle, but less than 9,000 negotiated sales in Texas, so that's pretty weak. But all of your southern plains trade for the most part was 142, and that was a buck higher than the bulk of the trade the previous week. Box beef cutout values were lower, a lot lower. And I realize that's what's causing these packers to be so hard to trade with. But the fact that they're having trouble keeping market on their product doesn't have anything to do with our product. We've talked about that before. We're not in the beef business. They tried to tell us that for many years. We're in the cattle business. They're in the beef business. If we'd have been in the beef business, we would have had record profits during the pandemic like they did, but we didn't get to enjoy that. They kept all that. Well, it's getting about our time to shine, and they don't even have any red ink pens in the packing houses anymore, and if they have to get them, so be it. But they're struggling with their box beef cutout values. Your weighted average on all of last week's sales on choice cuts, 254.76 last week. That was $4.51 lower than the weighted average from the previous week, and late week sales were a little bit lower than that at 252.40 on Friday afternoon. Selects were down hard. It's hard to sell that select meat, and we're having more of it than what we've been used to here for the last several months. Select product on the weighted average down 568 compared to the weighted average from the previous week, and our weighted average last week was 231.21, and our late week sales were more than $5 lower than that weighted average at 226.65. Choice select spread on the weighted average was $23.55, but pretty good movement at those lower price levels of 763 loads of cuts, grinds, and trimmings last week. Slaughter ran at a good pace, one of our bigger weeks, 667,000, and that's with a disappointing only 45,000 harvest on Saturday. Can't compare with the previous week because we had that Labor Day holiday, but compare that to the same week a year ago, 17,000 more. Talk about what else is going on. You guys getting ready to put your wheat cattle together. And you need to be doing that while our weather is still consistently warm. You get another 2 or 3 weeks in, we get into October, which is National Dead Calf Month. And then we're going to have 40s in the overnight, and we're going to have 70s and 80s in the daytime, and it makes everything sick, from school children to calves you're kind of trying to straighten up. But if you want to get some calves in, get them warmed up and ready for wheat, you can call Ellis & Carter Cattle Company there, Santo, Texas. He gave me the quotes on what he shipped out on Sunday. These are loads of cattle delivered from just west of Weatherford, Texas, into the Texas Panhandle, southwest Oklahoma, up in Oklahoma Panhandle, and even some southwest Kansas there. But these are steers and bulls, delivered prices. This will be a loads of them. 300-pound load of steers and bulls at $217.75. Load weight 360 at $198.75. Load of 415 pounders at $194 1/4. Load weight 470 at $183. A load of plainer type steers and bulls, they'd be colored up, mixed quality, maybe crossed up a little bit, but they still feed. But a load weight 505 of those plainer ones at $124. Sure sound cheap. 550-pound all blacks load of steers cost $179.75 delivered, and a load of all black all steers weighed 610 delivered at $179 1/4. Talk about your heifers. Load weight 310 at $183 1/4. 425-pound heifers at $177 1/4. Some all black heifers weighing 475 at $172.50. 490-pound load of heifers at $161.50. Some of those plainer heifers, like I was telling you about on the steers, weighed 540 at $107.50. Load of replacement quality heifers weighed 655 at $160.75. And some all yearling heifers weighed 660 at $158.75 delivered to Kansas. Talk about your feeder cattle market last week. Your real-time index on DB auction ended the week at 176.49. That was down $3.91 based on an 800-pound steer cash price. And like you would think, our cash feeder prices, actually calves and yearlings, all classes of cattle last week in your sale barns ran from $3 to $8 lower. The market was probably at its worst on Wednesday. We started out the week a little lower. Wednesday it was hard. Then Thursday your board come back quite a bit. And actually your late week sales were still lower than a week ago, but not as low as they were middle of the week. And I would expect your high volume Monday sales to be steady, maybe even steady stronger than they were last week. Look at your big sales late in the week last week. Fort Scott, Kansas there had about 1,900 head of feeder cattle there. You look at these loads and bigger that they had out of Fort Scott on Saturday. Look at those light 8 weights bringing around 180, which would be a big premium to your index levels. We had 2 loads weighed 875 at 172.50. Load weighed nearly 1,000 pounds at 165. That's your markets in the southern plains and but still higher than, like I said, your cash index levels that were happening last week. Some individual quotes. How about Nevada Livestock Marketing in Fallon, Nevada? Had a hell of a sale, about 1,600 head for their first seasonal feeder cattle special there. Had a good run and had some fancy ranch raised calves in there. One bunch of them, 54 head, weighed 489 at $219 in northern Nevada, guys. Talk about your Zoetis stick-out sale of the day for late last week, and it was on Friday. Bluegrass Stockyards, Richmond, Kentucky. You look at these big strings of cattle that come through Richmond, Kentucky right there, and just amazes me how they get so many of these big loads of cattle but in there. But I looked at your automated market report, and there was 230 head total of your 8-weight steers. They averaged 849 with a weighted average price of $167.97, which was sure lower, just like anywhere else. But 292 head of 9-weight steers averaged 930 in Richmond, Kentucky on Friday with a weighted average price of 168.08. Some other individual quotes all around. How about Burke, South Dakota? Burke Livestock. They had some grass steers on there with unbelievable prices there. One load weight of 70 head, 656 pound grass yearling steers bring 219 in Burke, South Dakota. How about Lanesboro Sales Commission in Lanesboro, Minnesota? Don't give you those very often, but they had Holstein steers in there. 55 head of Holstein steers weighed 937, bring 133. Look pretty respectable to me. How about Fort Pierre Livestock Auction in Fort Pierre, South Dakota? 56 head of steers weighed 821 at 189.50. But the best quote that I saw anywhere late last week or over the weekend, and your Mackerson, no BS, top quote for the day, come out of Crawford Livestock Market in Crawford, Nebraska. It was 133 steers, weighed 786 at $200.75. And that's your feeder flash for Monday.